Good morning, ladies and gentlemen. My name is Luke, and I live in Hamburg, Germany. And this is just my very first recording of my trading career, institutional trading career, that I have started about 6 months ago. And it's been quite good. I mean, it's a lot of work, a lot of theory. Yeah, if you think it's gonna be easy, and just certain things that you need to follow in order to make millions on the market, then you are highly mistaken, because that's what I thought in my first couple of months of trading. I think it was at the beginning of the year. Today is the 3rd of December 2023, and at the beginning of the year, around about December, January, yeah, December 2022, January 2023, I started looking into forex and retail trading. Studied candlestick patterns, and after 3 months I should have just stayed. Maybe if I would have stayed on that demo for a couple of months, and stay there until I'm profitable on the demo, I probably would have been successful, because I was at it day and night. That's all I did for 3 whole months, and clearly 3 whole months was not even enough, because it takes people years and years and years to be profitable on a broker platform and trading the market. But anyway, long story short, before I start with the the actual video, and the reason why I'm doing this is that uh, I looked at every, or not every, trader out there. I mean, almost all traders, and most of them had one thing in common. You see them driving Lamborghinis, you see them living in these big houses and all that. And that is the trap I fell into. I'm going to be very honest with you guys. And I've got nothing against these people. They are successful in their own right. Yes, there's nothing wrong with that. The problem was by me, and how I approached this whole industry. Yeah, thinking I can make a quick buck, and I was highly mistaken, and that was probably the worst thing and the worst possible way that you can start your trading career. So I opened a after 3 months of doing demo trading, I opened a live uh, plus 500 account, 300 euros. I lost that in a couple of days, and then I went back to the drawing board, studied for a couple of weeks again, and then for some reason I saw someone. I'm not gonna name any names. I'm not gonna throw anyone under the bus or shame anyone. I saw on YouTube once, one morning when I was laying in bed, and this person said, it was a guy, a man. He said that the only way you can build that understanding and know-how to make money on the market is to go live. Don't wait on the demo. Don't wait. Don't. And that was the biggest mistake of my life. And I opened a Pepperstone account, 2,500 euro account, and then started trading. At the time, started trading live with this money, having no idea of the ins and outs of forex trading, which I've come to learn. And this is obviously from my personal experience. I'm not speaking about anyone else's. I'm speaking about my experience and how I approached it, and what I've learned from it so far is that trading forex with that little experience is a death trap. It's a suicide. You are going to lose all your money. I lost about 700 euros from the 2,500 euros, and then that's when I told myself, okay, look, you're doing something wrong here, and I thought I'm just gonna stop, either continue studying the candlestick patterns, which I've come to know that it's useless. And when I say useless, I'm saying I'm saying that when I say useless, that is what I meant when I'm using it. Yeah. And not because I know there are other people out there that uh, are very profitable in using candlesticks. Yes, I know that. So I'm not here to bash any indicators, fib indicators, or Bollinger Bands, or exponential 21 average, moving average. I'm not here trend lines. I'm not here to do that. So then I saw this guy on, I think I got an email from him, because obviously I was now in the whole circle, in the whole trading circle, and it's all about markets and fundamentals and all that. I saw this email from a guy called Envy. That is his nickname, and he runs a training platform, institutional trading platform, called G7FX. All right, and then I watched this intro video, and I was hooked immediately. And that's just the thing. If you want to become a millionaire, you need to learn how to become a millionaire from millionaires. If you want to become a ice cream salesman and learn how to make ice cream and sell it successfully, you need to learn from people that has success in making ice cream and selling ice cream. If you want to become a successful trader, you need to learn from the guys that worked in an institutional trading firm. That's the only way you're going to learn the proper way. That's the only way you're going to do it. That's the only way you will achieve it. And this gentleman called Envy had has 16 years institutional um, trading firm experience. Yeah, obviously he doesn't work there anymore. He's doing it himself at home, and he's came up with these courses. And I bought a foundation course, then I bought a pro course from from this from this G7FX platform, and then I finished the foundation course already. I'm at the pro course. I'm at stage 2 in the pro course, and it's been going well. It's been going well. Obviously, what you see here on my screen at the moment is so far up until from when I started and up until the stage 2 of the pro course, and that took me about 6 months. Obviously, you need to do it at your own pace, and that is the advantage, because as I've learned through this course in a institutional trading environment where they teach you how to trade uh, at these prop firms, you don't have all this time. That's why the success rate is so low. But the advantages of and the luxury of buying a course and sitting here every day doing it, especially when you're a married man, you've got kids. There's almost no time. You're working obviously on this. You have a working job as well, a day job. But it took me about 6 months to get to stage 2. And on the right side of my screen, you can see that the evolution of from when it started. It started off with just what's on the left screen. Well, this is obviously an evolution of everything that I've learned so far. What you're seeing now, and I think the next video I'll do a a journey and an evolution of how envy got me up to this point. Yeah, I know thousands or millions have bought his course already, but I mean, I can only speak for me. So I will only refer to as I and not them or they. So for I'll give you guys a just a rundown of the evolution of how I got here. Otherwise, obviously, I'm not going to show you guys the course because it would be a disservice to Envy. I don't think that's the best way to go about this. So I'm only showing you guys what I've done so far. This is not the course. This is the actual Sierra chart platform where I am trading from. As you can see, this is a demo, right? And I'm paying around 40 euro or something like that for this course, and this allows me to trade. And on the right side, this is where I do my trading, and on the left side, this is where I see how the market has developed. Because I don't know if you can see this, I'll this pointer here, right? This so I'm going to do something today called merging and building composites out of the value of volume profiles that you see here. So this is the third of the first. So I'm going to do a full year because I got from when I started the stage two, I got new chart books that I had to download onto my Sierra chart platform, and now the one before, I had all the composites drawn, all the mergers made, and obviously when I got my new chart book, I have to do it over again, which is not a problem. I love doing it, so I don't mind. So I'm going to do a year's worth. So the whole of 2023, I will do up until today or Friday, because Friday was the last day of trading for the week. What I'm trading, it's either crude oil or it's the E-mini S&P 500 futures. I only trade. So most of the time, I only do the S&P 500. I don't do anything else, and I haven't looked at crude oil even. So I thought to myself, when I'll do that in the near future. But for the first video, I'll just show you guys what I do when I merge these profiles, because this is a day of trading. As you can see, if I split it out, you'll see there's a blue block there. So at 9:30 US time, the market opened on Tuesday, went up, came down, and then it did this. So on the right side, this is what happened. This is exactly what happened on my candlestick chart, and this is all the market orders. So one line is in half an hour of trading. So that's 9:30 to 10, 10:30 to 11, 11:30, and so on and so on and so on. All right. So as you can see, wasn't much time spent. Then here was a little bit of volume being built, and obviously most of the trades took place. So that's one day. So in order to build powerful composites, what I've learned so far is, mind you, I'm no professional. This is just a demo account. I'm still very, very, very far from the end product. Right? What I do here might be a bit slow, or the wording sometimes might not be 100% PC correct. But this is the reason why I'm taking you guys on my journey as early as possible, so you can witness the evolution of Luke the trader, and I will get there. I know that I will do that, and I just need to stay disciplined, and the consistency needs to be there, and then I will master it. So, but back to today, there is a lot of ways you can merge these profiles to create powerful composites and contextual lines. Is if it was if 2 or more days were in balance, or 3 days, 5 days was in balance, in when it was just a rotational couple of days, market didn't go anywhere, you can merge them. But here you will see there's a line which is called the value area high, value area low, and then the POC in the middle, which is point of control. That's where between these lines are as 70% of all trading that has taken place during the day on that particular day, on the 1st of the 3rd, 2023, which was on a Tuesday. And this red line here is the point of control where that's just the middle of the 70% where buyers and sellers were happy to trade at. Right? You can see this line here, the single print line. I mean, clearly the buyers couldn't agree on price because that's not the natural place for trades to happen. That's why you had this. It went up, it came straight down, but here people started trading, auctioning, and these here between these two lines, people were happy trading. All right, but the next day, the Wednesday, you will see that the market didn't agree on this day, on the previous day, because there's a lot of factors, obviously, fundamentals, Feds talking, unemployment, and so on, or just new investors that came in, yeah, that had a perception, a different perception of price and a different perception of where they are happy trading at, buyers and sellers, right? So I'm not going to merge those two, but then again, the next day, the Thursday, it went up in balance the Wednesday and came down. And so let's see how it looks if I merge these three together. Well, I mean, in theory, you would like to have a nice bell curve shape of market profiles with your two contextual lines, a nice composite that you're merging. But at the end of the day, the markets ain't perfect. There is so much emotion going on. The personality is so diverse. To think that you can have a perfect market is just it's in your dreams. You it's not gonna happen. And I think that's the only way you can treat the market. Yeah, it's not perfect. So I'll take that. So like I said, I'm going to merge those 3 days. Yeah, and then I need to mark them. Yeah. So I mark the CVA high, which is the composite value area high, which is this line here, and the CVAL, which is the composite value area low. And don't forget, you need to mark the point of control as well. So for that 3 days, the 70% of trading for that 3 days happened in between this area. This is where you wanna trade from. Obviously, when it reaches these areas, that's when price reaches this area, it's either gonna test it, respect it, come back down, or it's gonna break through here, build some value here, and then it might go imbalance. All right. So as we look at the next day, which was a crazy day, most of the time buyers and sellers could not agree on price. At so my point of control, it came through a little bit, tested it, didn't break through and build value, tested it, and went back up again. Build some value here on top of the CVA high, and then went in balance. So to me, those 3 days of emerging was pretty solid. It's pretty good. From here, that you can see it builds a little bit of value, and then it went up. Great trading opportunity right there. So you beginning to see already after 3 days, you getting beginning to see how important these lines are and the powerful and how powerful merging these profiles are, these composites are. Okay, so let's move on. Uh, so I'm not going to merge that. I'm not going to merge these 2 days. As you can see, there was no balance here. Nothing. These two balanced here, but yeah, I'm going to do that. Not going to merge that as well. Let's see this one. Yeah. See how it looks. And the great thing about this platform is you can just merge everything and then unmerge them or undo them or merge this if it doesn't if you don't see that you personally looking at it saying okay that works. You need to look at it from your personality and how you trade, right? Maybe if you would have asked me if I merge these guys here, right, and I look at that profile, I mean, there's a little gap there. But to me, that looks okay. If you would have asked me 2 days later, if I looking at the same picture, I probably would have said, nah, I don't like it. You know what I mean? So it's personal preference. Just make a decision and move on. To me, that looks okay. So let's do that. Just get it right on the line there. Okay, moving on. So we're gonna do a whole year's worth. I think it should be okay. A whole year's worth should be fine. Yeah, that looks okay. I'll do that. Obviously, my perception of a composite and how I merge them will be different next week when I continue with the course. So yeah, that's how it is now, and I'm happy with it. Okay, let's see. This day is a bit. So the rest of all the days, it's a bit balanced here. It went a bit imbalanced, but you could say that this year is for one person that's balance. For me, that's a bit of imbalance there. Then it came back and then it balanced here. So you need to see what works for you. Clearly, I won't merge these two, but then the market came down here. So you know what? I'm just gonna let it be and move on. I'll merge that. Yeah, sure. The thing about these merging these composites on these value areas are that you will see where the market respects these lines, these value area highs, value area lows, or these point of controls. You'll see the market will respect it, and then it won't work 100% of the time, you know, but if it can work 80% of the time, sure, I'll take that. And by the way, this is just the regular trading hours, which is during the day. So in the US, it opens at 9:30, all right? And for us here in Germany, at this time now, it opens at 15:40. The reason why it opens 10 minutes later is because the demo version of Sierra charts is on a 10-minute delay. So you get the correct information for what's happening in the markets, but it's 10 minutes delayed, which I don't mind. Let's continue. Okay, let's start here. Wait a minute. Okay, that looks pretty good. That looks pretty good. Yeah, I'll take that. When I looked at this for the first time, when I started this course, I was like, I will never be able to get it. And look at me, 6 months in, drawing composites, taking the initiative, making my own decisions, and sticking with it. I mean, this is powerful stuff here. So now we have an overlap there. So obviously here, this guy, you, not you, go at the bottom, this one. That is not important anymore. Let's cut it there. Not just that I don't mind being it being messy, but if the market is telling you that when you merge your composites that this is the new area where the market is happy trading at, why would you need that? Let's see if this works. Yeah, I'll take that. Okay, let's move on. See what happened here. Let's merge those two. Okay, that works. Then the market went imbalance. So this is the RTH, yeah, and the overnight session is the ETH, which is electronic trading hours. I mean, I'm not gonna trade in the middle of the night because that's the time when I'm sleeping. So you won't catch me trading in the middle of the night. And the great thing about the RTH is the day session is that when it opens here at 15:30, then that's great because I mean at that time by that time now at least I'm home already from work where I can then do my analysis, my expectation for where the market is going or what it's going to do today or on a trading day. So you won't see me. That's why I don't have that information on my chart as well. The ETH session, the overnight session, because at the end of the day, the day session that's where most of trading is happening. Anyways, 80%, 85% of trading is happening during the day. I'm not gonna waste my time during the night trying to catch a couple of ticks or a couple of pips. So let's move on. Let's see if I wouldn't merge this on a perfect day, but let's see how it looks. I mean, this is just huge. Okay, like I said, markets ain't perfect, and that you need to respect it. So that's what I'll do. Just gonna cut it here and move on. I'm not gonna merge that. Nothing happened here. Most of the day, buyers and sellers didn't agree on price, so just let it be. So where am I now? Uh, I'm at the 27th of the 3rd, so I'll just move my chart to the 27th of the 3rd as well. There we go. So what's this year? Where are we now? 27th of the 3rd. Monday the 27th of the 3rd, so market opened there. And this is that day. So let's see how it looks. So opened up, came down, went imbalance, then up, and then balanced. Okay, fairly balanced day, if you ask me. But these guys I won't merge. No, it's just all over the place. Then market just went imbalance here, imbalance. Then you have a quite normal balanced couple of days. Let's see if I just merge these guys. Okay, you can see there was a lot of time spent there. So I'll merge that. I'll merge that as well. Merge that as well. You want a nice bell shaped curve, but it just shows you that how the market operates. That this day, couple of days later, the market just came in and tried to fill this gap here. So I'll merge that as well. And that's what the market is doing there as well. So yeah, it doesn't look perfect, but I like it. To me, that looks beautiful. So this guy obviously has to go. And then don't forget the pocket look. Okay. So let's see these 3 days. Let's see if I merge these two. That's not bad. So this is now something. Maybe it's just the experience, the lack of experience, because, and I know Envy speaks about this, but I'm also gonna be sitting here on my own, as I'm doing it now, merging my own composites. So I need to look at it from how my personality and how I trade. And those guys were imbalanced. Look at that. It was in balance. In and not im. Im. So if I see, I could have merged this one as well. Those guys. Well, it was a fairly balanced day. Sure. Can merge that and merge that as well. See. Okay. Now, because this was also a couple of days very strong composite here, but now this is also a very strong composite here, but this guy, but that's just the thing. Look at all the other days where the market tried to fill these gaps. So I'm going to cut this here. This guy I'll cut as well. Okay, and then outline this new composite. And let's move on. Okay, so those two I won't merge. Nope. That's I'm not going to merge. So I'm not going to merge. Let's see. Clearly I can't merge these three because look at that. It's not balanced. So merge this ones here. Yep. Looks okay so far. Oh, See, look how pretty that looks, man. It's amazing, yeah. It's like obviously you're gonna treat this as a business. This is your business where you are going to make money from. But I don't know. I feel like I'm falling in love here. It's amazing how this works. I'll merge these two. Sure. So that's why I said I do this merging, even though big this big composite here obviously holds a couple of days. This only holds 2 days. But as you can see here, the market opened here, respected this here. Was trading done under this very value area low of this composite with 2 days in it. And the market, the investors, the traders for that day respected this line, this value area line here. And look at where's the previous one, which is a couple of days. So that's not important anymore. As you can see, new investors, new traders came in, and for them, that is important. This pressure here, it has been respected, didn't break through, so, and then the market went down. That's the power of merging and composites. Mm, I don't like that. I don't like it. Just let it be. Okay, so let's move on. Okay, now I need to move my chart as well. What is that? The second of the sixth? Second of the sixth. Here we go. Okay, let's continue. Yep, that looks good. That looks good. And when I mark my composite, not forgetting the I forgot the POC, but I mean that's in the past now, so I'm not still gonna worry about that. Look at this. Look how powerful this is. Market opened, respected this value area high, and said nope, I don't want any part of that, and then went in balance the next day as well. This is the power of composites. Yeah, I'll take that as well. Okay, let's move to the next day. Yeah, I'll take that. So these are 2 days. These are 2 days here as well. But if you look at this one here, market respected it there. Yeah, it came right through here, but the market respected it there on the next day. So I'm not going to merge these two because it respected it here. Yeah, tested it here, didn't break through. It was tested, and that is the mistake I made. all which feels like a lifetime ago already. Where when I saw this here, I thought, it's broke through. It's going to either reach the POC, test the POC, or go to the other side. Obviously, I didn't see this on my retail broker app. I only saw I only relied on candlesticks. But now I know that this year, this is just a test, and I wait. Either maybe if it comes here, and then yeah, sure, then I'll look for trading opportunities. But if I miss it, then I miss it. There's you will get the next trade. So yeah, let's move on. And that is the lot of the times what many people the mistakes many people make, and then they say, yeah, it's all a scam. The market knows what you want, and the market can see what you're doing, and the brokers can see what you're doing. That's why they stomp your stop loss, and then it continues to go in the right direction where you have predicted it. But that's not true. The market does what it wants, and you need to be patient and calculate your risk versus reward. And if you couldn't trade today, yeah, sure, then that's fine. You will get that trade. Okay, this one. Yeah, I mean that market went a bit imbalanced there, but yeah, it's okay. I'll take that. Don't forget the Bok look. There we go. Bok in. Okay, let's move on. So we're halfway through, ladies and gentlemen. I just love this. I can sit here all day. Okay, so let's see. Yeah, that works. That works. Sure, I'll take that. So, market up there respected the puck and then went in balance. Powerful stuff, man. Yeah, obviously it didn't respect it completely, but this is just the power of composites. That is your reference point. There is your trading opportunity. That looks fine. That looks fine. Yeah. And since I've been doing this course, I know uh, uh, I understand the markets 20 times better as to when I was using these candlestick patterns. I can't believe I fell for that. That is just garbage if you ask me. But to the next person, that would be gold. Yeah, because they understand it. I just don't understand it. So I opt to do it the right way, and this is the right way. And that is my personal opinion. That's the personal opinion of Envy, and I agree. This is how it needs to be done. And obviously, as time goes on, I will prove my point and why this is the best way to do it, to trade the market. Okay, let's see what happens here. No, I don't like it. Well, it did test the POC here, so okay, I'll take it. I'll take it. I don't know if I said this already, but I'm not done with the course yet. So this is still a very, very young Luke, a youngling in the world of trading. So, but I'll keep you guys updated on my journey for sure. Okay, this, yeah, I don't like this. Nope, 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 nope. I don't like this. What's this? No, nothing. That is one day. So, nope. I don't like it. And the great thing about these composites is these lines will run straight through until the year 2030, which is awesome. So, as you can see, I mean, I don't know how long ago. This was a couple of months ago already. I mean, we're in the 8th month now. This was a couple of months ago already, on the beginning of the year. And look at this. It respected that POC. I mean, this is just points where you can key off. I mean, it's yeah, stuff. It's, I don't want to say it, but it's almost easy to a certain extent. Clearly, obviously, the success rate of traders learning how to trade is obviously very low. So clearly, it's not easy. But I mean, come on, man. This is just amazing stuff. Okay, so let's see. Obviously, there was a lot of training taking place there. So let's see how it looks. I mean, you can always see how it looks. I mean, that looks beautiful. I'll take that. And there's a thing called discipline. Yeah, so it's a craft that not a lot of people have, and that is why you don't succeed. If you don't put in the time, if you don't work at it, if you don't use the correct amount of hours on a certain chapter of a course or whatever it is you are doing, you're not going to succeed at the end of the day. There's going to be gaps in between. Yeah. And I can already feel that in my foundation course. I didn't rush through it, but there was a lot of things that I didn't note down. Or and if that is that I should redo the foundation course, then yeah, so be it. Maybe that's going to be great, so that I can take you on that journey as well from the beginning, and not somewhere uh 30% into the 100% already. You know what I mean, in completion. So maybe I should just do that, because as I'm speaking to you guys, I realize that the lingo is not on par with what I'm saying. I mean, you guys can understand me. I mean, my English isn't that great as well, but you guys can understand me. But it would be great to just be lingo know-how, the PC correct term for these things. But it will come in time, I'm sure. Okay, so let's continue. Yeah, that looks okay. That looks okay. And let me see that now. Now let's merge these two together. Oh, man, that is just perfect. All right, and this goes here, and look at that. The next day, what was that? The 14th of the 9th, market opened there. So if you had this, if on this day, the 14th of the night, you had this composite drawn, this couple of days here, perfect trading opportunity. And look at that. Months ago, or weeks, Look at that. It respected that area as well. This. I love it. So which means if I merge these two, do I need to erase that? No, I'm not gonna do that. I'm not gonna do that. So let's move on. These three I'm not gonna merge. Nope. I'm not gonna merge. Let's see if that works. That looks okay. Yeah. I'll take that. This needs to be cut here. Oh, I'll just cut it here. Okay, now we move on. That's okay. I mean, look at that. So hour it's spent here building volume, and then came down. Buyers and sellers couldn't agree, and then the market came down. Went in balance. Short. So we are almost done, ladies and gentlemen. Okay, let's begin. Mm, hmm. Let's see. So no, I won't merge these profiles. What about this? Yeah. Oh, with this. Cut. Yep. This I'll cut as well. That looks about right. Mind you, tomorrow I'll look at this again and I will think, maybe not, and then I'll change it. So it's ever changing. It's never going to be concrete because that's just who we are as human beings. Today we will feel that we like it, and tomorrow we decide not to. That's just how it works, and that is exactly how the market works. The perception of price will always change, and you need to change with it. I can tell you right now, when I was learning candlestick patterns, I didn't know that. I wasn't so open. I was just like fixed on that. Yeah, that is my line. I'm not going to adjust it. I'm not going to change. Big mistake. Yeah. So what you can also do is you can say merge begin and then merge end. You know what? That's not bad at all. Okay, let's move on. Clearly it's on top. Yep, it's on top. All right, so let's do that. Yep, that's perfect. I'll take that. That needs to go. Yep. So let's see, because it came right through here, so let's merge that. Erase. Bring this up. And bring that there. That's not bad. I'll take that. Okay, almost done. I like that. Sure. Yep, I like that. That's perfect. So I'll cut this here. So there we go. And then I'll mark this composite. I mean, I'm not gonna. I want. I'll. Not gonna. I don't want to repeat myself every time, but just showing you how powerful these composites are. Market opened. Wasn't going anywhere but up. So that's perfect. I'll take that. Yep. And now I think this was Thanksgiving. These small days. There's not so much trading has taken place. So this is where I'll cut that. Yep, I'll cut that there. Respected the POC. Yep, brilliant. Okay, ladies and gentlemen, so that's it for today. Yeah, I think the video is quite long enough. I don't know from when this was, a couple of months ago, but look at this. Yeah, a market opened here on Friday. Obviously, I did a few trading there and blew it most of the time, but I was profitable in certain parts. But I end up with a loss of 551 euros, which that would have been real money. I would have done that relying on these effing candlestick patterns. But this is what I wanted to say here is that before I jump to my right side, the right side of the screen, I'm just going to end it off here by saying that market opened, respected the POC, went imbalance, and look where it ended. This little triangle is where trades, where the day has stopped, the RTH session has stopped. But look at this. It built a lot of volume here. And it tested this part here and it respected it. This CVA high, I mean, this is from a couple of months ago. This is just how powerful these composites are. But yeah, I think I've proved my point here on the left side of my screen. So now these all are all trades that I've taken. These are this line that's running here. It's called the VWAP. It's value weighted average price, and this is the standard deviation bands. This is not an indicator. It's a developing profile, which this is static. These profiles static. This is a developing profile of this on a day, right? So it's not a indicator, it's market orders, it's people placing trades, an auction between buyers and sellers. All right, there's no indicators here. You just predicting price based on market orders. Anyway, stage 2 in my course is where we start with VWAP, and as you can see, my VWAP experience is not that great yet, because there's a lot of and this is exactly what I was talking about. This old habits that I've picked up at the beginning of the year, which now I have to all unlearn, and this is just some of the old habits that I'm busy unlearning as I'm mastering this course. So as I'm learning this course now, I'm learning a lot more about the VWAP. So the next couple of days of training will definitely be miles better than what you guys see here. And this year will definitely be in the plus. So yeah, that's me, guys. I'm out. Thanks very much if you stuck all this way until the end of the video. I appreciate it. And yeah, happy trading. Cheers.